This is India's #1 news network, and you're watching News 9. English news as it should be.
Very good morning. You're watching News 9. I'm Karthik Malhotra, and we have a lot of action-packed stories lined up for you this Tuesday morning. First up, we will bring you on the show with China curbing exports of its rare earth elements, especially magnets. There's bound to be chaos in India's automobile industry as well as electronics, so white goods. Add to that, of course, we will have two very special guests joining us on the show. We will have Dilip Chenoy as well as Barnik Chitran Metra. But that's not all. We'll also bring you a mood check of the Indian stock markets with Mohit Kang as they open. You're watching Morning Brief at 9. This is Morning Brief at 9. These are the top stories that we're tracking for you this Tuesday morning. The United States and China resume crucial trade talks in London amid renewed tensions. Trump says China is not easy to deal with. China's rare earth element export curbs disrupt India's auto industry as supply chains stall. India actively working with industry stakeholders and startups to develop alternative domestic capabilities and secure self-reliant supply chains, says Piyush Goyal in Switzerland. Meanwhile, Commerce Industry Minister Piyush Goyal also says that deepening India's trade ties with Switzerland and Sweden in his key visit to Europe. He showcases the decade-long economic transformation under Prime Minister Modi, unveils roadmap for Indian Big Four and confirms EFTA deal implementation from the month of September this year. Elon Musk's Starlink is set to launch satellite internet in India within 2 months after securing key license, with plans to deliver high-speed connectivity to remote areas and offer 1 month free trial and prices beginning at 3,000 rupees a month. Russia's Lavrov highlights revival of long-stalled Russia-India-China or RIC dialogue as India-China tensions ease, calls renewed trilateral cooperation a key step towards pan-Eurasian integration. Viral video of Indian student in handcuffs at Newark airport sparks outrage online. Safety and dignity of Indian students in the US have been questioned. The Indian government clears Micron's 13,000 crore rupees semiconductor SEZ in Gujarat Sanand and Equo's 100 crore rupee electronics component SEZ in Dharwad, Karnataka, giving a major push to India's chip manufacturing drive. And after successful interception of Pakistan's air threats under Operation Sindoor, Indian Army set to receive 30,000 crore rupee boost as Defence Ministry prepares to clear acquisition of indigenous quick reaction surface-to-air missile system for border deployment. China's trade pain deepens as export growth stalls and deflation surges amid US tariff pressure. Let's start with the first story that we're tracking for you. Trade tensions between the world's two largest economies, the US and China, are back in the spotlight this week. Both US and Chinese officials are in London for critical trade talks aimed at restructuring and rescuing a fragile tariff truce. Now, the meetings kicked off on Monday at the Lancaster House, a historic venue run by the UK's Foreign Office. The two sides are set to meet again on Tuesday. Now, it follows a previous round of talks last month in Geneva. China's delegation is led by Vice Premier He Lifeng, and the United States is being represented by Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and Trade Representative Jameson Greer. Now, speaking to reporters on Monday, US President Donald Trump stated he was receiving only good reports from the talks and added that China is not easy to deal with. Listen in.
We are doing well with China. China's not easy, just like your home country is not easy there. I think we're doing very well. They're over there now. I'm only getting good reports. It's a little early, but they'll be calling in soon. In fact, probably when I get back, I'll have my first call from them. We want to open up China. And if we don't open up China, maybe we won't do anything, but we want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
There's any sort of limitation.
We're going to see. Look, China has been ripping off the United States for many years. Nobody charged them 10 cents. No president had the courage to charge China for whatever reason. They didn't want to do it. I took in hundreds of billions of dollars. I put on tariffs on China when I got in first term, and we took in hundreds of billions of dollars, and then I did it again, but I did it for a lot of others. If you look at the stats, the deficit last month was cut in half. Everybody was shocked.
And staying with China and China's hegemony in global supply chains, well, China in the month of April had tightened its grip on rare earth element exports. Now, that's a vital component for electric vehicles as well as electronics. It has put Indian manufacturers, especially those in the auto sector, in a tight spot. Now, rare earth magnets are vital for both electric engines, ICE engines, as well as consumer white goods. Supply chain disruptions are spooking Indian firms. At least 2 shipment requests have been denied and supplies are stuck at Chinese ports since early April this year. Remember, Beijing's April curbs, a response to US tariff hikes, have added layers of licensing red tape, hitting Indian importers particularly hard. Now, India is saying it is exploring diplomatic channels to get China to reopen supply taps and also preparing to reduce its reliance on Chinese imports of rare earth magnets in the long term. Now, speaking in Bern, in Switzerland, Commerce and Industry Minister Piyush Goyal confirmed that India is actively working with industry stakeholders as well as startups to develop alternate domestic capabilities and secure self-reliant supply chains. Listen in to what the Commerce Minister said.
Obviously, there are issues around the stopping of permanent magnets from China to India, which will affect our auto sector particularly and several white goods and other sectors. Our embassy is in dialogue with them. Commerce Ministry is also working. Some companies have put in their applications and we hope that good sense will prevail and they will get their approvals for permanent magnets. Having said that, we are working on several other tracks to see the availability from alternate sources, to look at our Indian Indian Rare Earths Limited, providing the necessary materials to be able to speed up the development of our own products. And in a way, it's a wake-up call for all those who have become over-reliant on certain geographies. It's a wake-up call for the whole world that you need trusted partners in your supply chain. And India is now becoming the alternate that the world is looking up to, because with India they have the confidence that they will never have to suffer this kind of.
Let's delve deeper into this very important topic. And joining us this morning is Dilip Chenoy, Chairman of India Battery Swapping Association. I also have Barnik Chitran Matra, PE Investor, Managing Partner, Chrysalis Equity Ventures. Mr. Chenoy, let me begin by asking you, how relevant really are these rare earth magnets? What components are they exactly used for? Just decode it for our viewers this morning. What is India's dependence really when it comes to rare earth magnets?
The whole rare earth, usage in industry, right? It spans, like you heard the Commerce Minister say, spans white goods, some defense equipment, and also auto. So the permanent magnet in electric motors, right? Especially if you use nolidium, iron, or boron magnets, they are rare earths and they're used here. Second, battery chemistry, but I think it's less common, but it's used in nickel metal hydride batteries, which are alternate to lithium, which also we are inordinately dependent on China. And of course, in electronic components, it is used in the display system. And of course, China controls about close to 75 to 80% of the global production and over 85% of the global refining capacity here. So what is the impact? What are the areas that we're looking at? One is electric EV motor production. Second is looking at battery alternatives, which will be limited. And of course, it's going to impact the whole visual display sector and also motors in the white good sector. So that's the range of the use of this rare earths in industry in India.
Right, Mr. Chinoy. Barnik, with China owning about 70 to 75% of rare earth element mining and 85 to 90% of exports. Now the question really is, even though Piyush Goyal is saying that there are short-term challenges, but even in the long term, can the world really live without China's supply chains?
No, I think we have to understand that there has to be diversification of supply chains. If you look at production capacity outside China, there are several countries which are graphic listed, whether it be Australia, whether it be Brazil, whether it be in African countries, where you do have reserves of rare earth minerals, but not enough developed production capacities. I think the more important part is also refining and processing capacity, where if you look at that number also, China owns nearly 90% of that. So countries like India and global economies have to develop their own refining processing capacity, but more importantly, have more diversified supply chains with countries beyond China, right? Whether they be in Africa, whether they be in South America, to ensure that we have more access to rare earth metals. And more importantly, I think there is now discussion of how you can build alternate technologies, whether they be in battery chemistry or whether they even be in motors where there is magnetless motor technology, where I think there has to be a technology diversification lens also, where alternate technologies and reliance on rare earth minerals can be got away. But this is a long-term play. It's not going to happen by a few startups in India doing something. That's not the way we have to do. It has to be a government-to-government-led initiative to diversify supply chains. Just expecting a few handful of companies who suddenly explore the world and create new sources of this is very hard to imagine.
All right, that's a lot of information you've given, Barnik. Let's take it one by one. Dilip Chinoy, like Barnik was saying, and of course the minister also alluded to, is this expansion and exploring alternatives. And while we understand startups may not be the only port of call, but the fact really is that, is the industry really already experimenting with alternatives to such magnets?
Yes, actually there is a program where many companies are looking at magnets without rare earths, right? Around the world, including in India, there is also a kind of a combined effort to do that across different industries. So yes, as Barnik mentioned, it has to be a collaborative effort and it has to be also supported by government. So in terms of manufacturing of battery chemistry outside lithium, unfortunately, like I mentioned, the nickel metal hydride batteries also use rare earths, but that's again challenging. So we need to look at that. And the second is in electric motors, to look at how different options are possible. Tesla had developed something there. And hopefully a combined industry effort will do that. There are talks between industry and government on this, and it's a continuing dialogue, as you heard the minister say.
Right. Okay. Barnik, the minister also said that there are short-term challenges, but there's an opportunity in the long term. Now, is this opportunity going to get unlocked in the long term only if there is an amendment to the Mines and Mineral Act? And do we really now very urgently require these mining reforms to kick in?
I think we've been waiting patiently for the last 20-25 years for mining reforms, right? And far more, I would say, action in the sector. While there is a longer term opportunity, I think the ability for the government to mobilize local resources and local PSUs is something which I'm quite skeptical about, right? So again, in the shorter and medium term, I think Indian industry should really look at supply sources outside India. Maybe there are some investments supported by the government in refining and processing capacity. If there is mining reform and if there is the government PSUs like the Rare Mineral Corporation and Authority can step in, that'd be a delight. But again, I'm very skeptical of any such reforms, at least in the short term. It takes a lot of political courage and also participation of the states to ensure that this gets debottlenecked in the medium term. But again, let's have supply sources outside India. Let's have more refining and processing capacity in India, which allows us to diversify more than what we have, which is dependence on China.
So, Barnik, exactly what kind of a timeline should we expect, given the fact that even if the mining reforms were to be announced and if the framework for the reforms was to come in, let's say, optimistically over the next few months, I think both finding suppliers outside of China and locking in trade deals with them and also getting your own mining sector to kickstart and for activity to begin in the mining sector is definitely a few years.
So I think if you look at the examples of other countries, right, I think you will not hear German automakers and European automakers complain so much about reliance on China, right? This typically takes a 3 to 5 year sustained effort, right, to work with governments and counterparties outside India to develop sources which become stable, significant sources of supply. So in terms of timelines, forget about reforms internally. I think you can actually, along with government support and a government-to-government initiative, launch this, and that will take us around 3 years to start seeing real benefit, right? Now, what you will see is the local reform and the local production ramp-up will take a little bit longer, right? While it's easier to ascertain that, listen, we will get this done, right, given the stops and starts we have in the sector. And notably, please note that internal mining of minerals is not just a domain of the central government, but the states also have to step in. And in a lot of the states where you have mineral-rich reserves, they are not governed by the ruling coalition. So I am far more, I would say, cautiously pessimistic about how soon we can get local capacity on board, but getting countries and diversifying supply should be done within a 2 to 3 year time frame. I think the local capacity can take probably 5 years, but that also I'm far more skeptical.
All right, Dilip Chinoy, for those 2 to 3 years for diversifying supply chains and at least 5 years for local supply to kick in, we saw in the immediate post-COVID aftermath, we saw semiconductor shortage and auto prices really went through the roof. Now, with this shortage or with this sort of curb in rare earth magnets, what's the impact on the consumer? Will inflation kick in and how bad will it be?
Well, I think, Karthik, just one point, just to add to what Barnik said, there is an alternative for changing the mining policy and doing that. If you can quickly devise 2 separate PLIs, right, production-linked incentive schemes. I know it's not actually happened in the mining sector, but I'm pretty sure you can devise a PLI scheme there and actually work on it, and that may shorten the time frame. You might see the government actually announce 2 separate PLIs in this sector. But in terms of cost, right, the first thing you're actually going to see is because of the shortage, right, there are 2 aspects. One is the availability of certain models, and unfortunately hybrids are more impacted by this because the technology is such. And second, you're going to see cost go up. Cost in terms of it will drive up the motor costs, will drive up component costs. Even if you do alternative sourcing arrangements, you will not see this, the cost being maintained at the same. So definitely one cost going up. Second, of course, there are going to be supply chain delays, right? You saw that happen during COVID. Certain models were discontinued. In fact, Suzuki has announced that they have discontinued a certain model in Japan. You've seen the component manufacturers, BorgWarner's, ZF, all also, announcing that they have challenges. And, in fact, what Barnik said, maybe the automakers in Europe are not impacted, but even Mercedes-Benz and others have also said that there's going to impact that. So one, costs will go up. 2, supply chains will go up. 3, certain models will not be available. And of course, most importantly, localization goals, which most countries have done, trying to avoid their dependence on imports, etc., is going to be stalled. So this is a 4 immediate impact of this in the auto sector, and including in the white good and other sector. Incidentally, I just forgot to add last time, ISRO and DRDO are actually conducting research and working on rare earth magnet substitute. Or if industry could actually get onto it, it could be a very interesting program going forward.
It would be an interesting.
And again, the COVID experience shows how it can be done.
Absolutely.
If government, industry, and the institutes get together, you can dramatically do things, and you can, you need to actually do the same thing what you did there: past clearances, joint working, prototypes, etc. going forward.
All right. Well, that's a long road ahead, and till that long road reaches its ultimate conclusion, there is going to be, of course, some hiccups and some chaos along the way. Barnik, Dilip, thank you so much for taking the time and joining us here this morning. And with that, we will slip into a very short break, but markets have opened flat after the break. Mohit Gang will be here to explain to us what is driving the somber mood in markets this Tuesday morning. You are watching Morning Brief at 9.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
A deep dive into what matters to you the most. Angles you won't find anywhere else. News that impacts your life.
Welcome back. You're watching Morning Brief at 9. Let's bring you a mood check on the Wall Street as markets have opened just a few minutes ago, and it seems to be a flattish open for stock markets today. Both Nifty and Sensex are just about marginally in the green this morning, but better news coming in from the small cap and the mid cap space. Meanwhile, let's look at the India VIX. The India VIX is also ebbing a little lower today, down about half a percentage point to about 14.62. But I think overall the news on the Sensex is fairly robust. Sensex is holding in the territory of about 82,500 or so. Will it breach that 82,500 mark today or not is something that we will have to see during the day. Meanwhile, Nifty 50 also comfortably above the 25,000 psychological level at 25,133. No real news drivers per se, mostly to have a solid impact on the indices. But let's look at the Nifty 50 heat map. and see where is the action this morning really coming from, both when it comes to stocks that are on the surge and stocks which are seeing a little bit of pressure. Well, pressure for some reason coming in the banking space this morning. We will just understand why ICICI Bank is down about 0.6 of a percentage point. Meanwhile, HDFC Bank is down about 0.4 of a percentage. Bharti Airtel also registering a little bit of pain this morning. Could this be linked to the news that we heard about Starlink entering India and offering broadband connectivity? Well, that perhaps played out on the stock yesterday, seems to be casting its ugly shadow on the Bharti Airtel stock this morning as well. Meanwhile, even consumer stock Unilever is down about 0.3 of a percentage point. Auto stocks are comfortably in the green this morning. Maruti Suzuki, M&M, Tata Motors all registering healthy gains. Meanwhile, even the IT sector is looking quite upbeat. Infosys is up almost 1%. HCL Tech is up about 0.8%. Meanwhile, Tech Mahindra is up 1.5% or so. Well, what is the momentum driving the markets? We have a very special guest joining us this morning. Mohit Gang is here with us. Mohit Gang, co-founder and CEO Moneyfront. Thank you so much for taking the time and being here with us this Tuesday morning on News 9 after a long time. Good to see you. Help us understand what's the mood of the market today. Why are we seeing banking stocks in pressure, especially ICICI Bank and HDFC Bank?
Thank you so much, Karthik. Always good to be talking to you. Yes, and I was off for a little while. Look, I think markets have no reason this morning either ways, right? So I think all that markets are looking for is a headline from US and China trade talks, which isn't coming so easily. And I think there are some tough negotiations happening there. So there is no real trigger for the markets. We had a trigger in the policy meet, which played out over the last 2 days. And that played out primarily in the NBFCs and finance companies and maybe capital market plays and so on and so forth. For banks per se, a rate cut is always not so positive. Right, because the loans get repriced immediately and the deposits aren't priced so quickly and so efficiently. So typically, I think that's at a very high level though. But yes, for banks, there is no positive trigger right now. And as I said, for the markets per se, there isn't any positive trigger. We are now looking forward this year, perhaps to some news on the monsoon front, which isn't looking bad, which should ideally be positive. The inflation projections are pretty neat as given by RBI sub 4%, so which is also looking very attractive. I think the GDP growth rate, the GST collections, all those macro parameters look good. And typically, I think markets just need a trigger now, my sense is. And the rate cuts plus the tax benefits which were doled out in the budget, both should play out now in Q2 and Q3 of this financial year. So my sense is we should keep a look at the mid caps now that the larger play on the Nifty top heavyweight stocks has got played out to a fairly large extent. I think we need to keep an eye on the mid caps because all these are extremely positive triggers for the mid cap basket per se. So I'm hopeful and I'm watching for few triggers, Karthik.
All right, let's see when those triggers really come in. But that's an important headline you're giving, that mid-cap is the space to watch out for, because perhaps the Nifty 50 stocks, the large caps, have been played out already in the market. But coming back to the triggers, Mohit, that we are expecting, and of course, day 2 of the meeting between US and China in London on potential trade talks, trade negotiations, should come up with some outcome today. Now, if that outcome is positive for US and China both, what is the likely impact going to be on India?
Karthik, look, I'm very hopeful that the talks which are going on, the outcome will be positive, right? Okay. Both the countries need each other. They need it desperately, right? The US needs the rare earths and the Chinese needs the tech. So there isn't any way out for both the countries. And I'm sure that from whatever it is, at whatever level we are standing today, from that level, looking forward, it will be definitely positive. Now, the impact and the extent and the magnitude is what the markets will have to gauge once the outcome comes out. My sense is one should brace up. And clearly, the global headlines are looking much more conducive as we are sitting today. I think from a US-China trade war perspective and from a macro perspective domestically, I think both the triggers are just waiting to burst out of this rim. And my sense is investors will be, it'll augur well for investors if they are well positioned in the market right now. I think there is no sense of keeping out of the markets at this juncture. One has to be in the market and play out as and when the rally comes.
All right. Since you did mention the trade negotiations between US and China and the fact that rare earth elements is likely to be discussed threadbare, if not earth bare, I'm also looking at auto stocks this morning. Not too much fear seems to be emanating from this export curb that China had put in the month of April. In fact, Maruti, Mahindra, Tata Motors are all quite comfortably in the green this morning, hoping for a positive outcome. And do you believe that perhaps that outcome could be positive only for the US and countries and companies in India, for example, could still be struggling for China's export curbs to be eased?
It's a tricky thing to call out, Karthik. Honestly, I honestly can't assess as of now as to what companies will get impacted in India and to what extent. US definitely will have an impact, and the whole reason why China is doing is to impact US and not the other parts. My sense is the supply chains will find its way out, and perhaps India might not be impacted to a large extent. In fact, I foresee negligible impact on the Indian markets per se. My sense is for the auto basket as a whole, I think the rate cut was a good positive trigger. It augurs very well for the entire auto basket. They were extremely well priced though, and perhaps the rate cut could bring in a new level and a new rally out in the auto stocks in times to come. If obviously the Chinese news flow remains positive.
All right. The news flow does look hopefully to remain positive. Meanwhile, I'm also looking at the IT stocks and good momentum on IT stocks this morning, Mohit. Again, directly linked to what is happening in the US, or are there other triggers? Because, of course, we've seen the job data has been fairly okay in the US, and the possibility of a rate cut, therefore, gets pushed even further, doesn't it?
Look, I think from an IT perspective, it's imperative that the US as an economy and as a country does well. And my sense is what the IT sector or the IT pack is factoring in currently is that US-China trade war will see the relationships between the two countries again back to normalcy. And perhaps that would mean that companies will start spending, and perhaps the IT sector will find its clientele and the markets back. But I think there are too many ifs out there. My sense is, as of now, I would stay away from the IT pack, Karthik. I think it's had its share of run-up in last 2 years. Okay. And until and unless we have extreme clarity on the rate cuts, which we don't have in US right now, and we have a clarity on how the US economy is coming back on tracks and how the companies are likely to spend further, I would stay away from the IT pack as of now.
All right, stay away from the IT pack, but staying with technology now. Mohit, Elon Musk's Starlink is set to launch its satellite internet services in India, and likely in the next 2 months or so after it got the license from the Department of Telecommunications. Now, Starlink therefore becomes the third player in India after Bharti's OneWeb and Reliance Jio to get the green light for satellite-based internet in the country. Now, as part of this rollout, what we are reading, Mohit, right now is that Starlink will offer a 1-month free trial with each device, and that device is quite exorbitantly priced at about 33,000 rupees. And also, the monthly unlimited data cost for the users will reportedly be as high as 3,000 rupees. Now, putting that in context, Mohit, does it really come across to you as Starlink being a real threat to Bharti Airtel, Reliance Jio with such pricing, and perhaps the use case for satellite-based internet still, as we understand, being restricted only to remote rural areas where penetration of broadband has not really happened as it has in the rest of the country? Do you see Starlink emerging as a real threat to Reliance Jio and Bharti Airtel? Because Bharti Airtel stocks are down about 0.5% or so again in trade this morning.
Look, Karthik, in a country like India, which is extremely cost sensitive and rate sensitive, I think the data prices, if you see in India, are the lowest across the world, honestly. And to compete at that level, it would require a different kind of localized strategy from Starlink. Unless they come out with a plan that they're only catering to a particular segment in India or to a particular kind of clientele. And I think that's not a bad strategy, honestly, to start the foray. And they could figure out whether they really want to get into the hinterlands and they really want to get into the tier 2, tier 3 market segments with an extremely price competitive, price sensitive dynamics. So my sense is the market is large enough, it's massive enough for 2, 3 or even 4 players to survive together. right? And I don't think so. As of now, we need to fear on Jio or Bharti Airtel. I think they are well-established players in the market with extremely healthy market shares to both of them. Right. And to chip away market share with this kind of a pricing, I don't think so. Honestly, that's happening easily for Starlink.
All right. Well, Mohit, thank you so much for your input, not just on the markets, but also on what we are likely to see in India's telecom space. Thank you so much. Pleasure having you with us right here on News 9.
Thank you. Always a pleasure.
And moving on now, Russia's Foreign Minister Sergei Lavrov has proposed a possible revival of the suspended Russia-India-China or RIC trilateral dialogue. Now, speaking at the Forum of the Future 2050, Lavrov said tensions between India and China have significantly eased, opening the door for renewed cooperation. He said, and I quote, "I really hope that we will be able to restore the work of the Russia-India-China trio. We have not met at the level of foreign ministers for the last couple of years, but we are discussing this issue with my Chinese colleague and with the Indian head of the External Affairs Department," unquote. Now remember, the RIC or the Russia-India-China format has been largely inactive since the Galwan Valley clash of 2020. Lavrov emphasized that restarting RIC could be a crucial first step towards larger pan-Eurasian processes and the creation of a multipolar world order. He also highlighted the key role Russia and China must play in shaping this evolving continental framework. Meanwhile, a disturbing video shared by an Indian-American entrepreneur has sparked outrage on social media, showing an Indian student being handcuffed and deported from Newark Airport in the United States. The entrepreneur, who was boarding the same flight, described the scene as heartbreaking, saying the student was crying and treated like a criminal. Tagging External Affairs Minister S. Jaishankar and the Indian Embassy, Jain urged action, calling it a human tragedy. The Indian consulate in New York has responded, saying it is in touch with local authorities and remains committed to the welfare of Indian nationals. The incident has gone viral, raising concerns about the growing fear and uncertainty among Indian students in the United States, with many now questioning whether the American dream is worth the risk. Well, COVID-19 is clearly back. As per latest data from the Union Health Ministry, India has 6,491 active cases, with Kerala continuing to top the chart as the most affected state, with as many as 1,957 cases as of June 6th. Now, this was followed by Gujarat with 980 cases, West Bengal with 747 and Delhi with 728 cases. While hospitalizations remain low and most cases are mild, the government has increased surveillance, testing and hospital preparedness. The dominant variant in the country is the JN.1, which is highly transmissible but generally mild, accounting for over 50% of the current cases. However, health authorities insist there should be constant monitoring of the situation, as the virus is a new mutation, and although there are fewer chances of another pandemic, it cannot be said for certain. Several groups in India remain particularly vulnerable: the elderly, those with underlying health conditions such as cardiovascular diseases, lung or respiratory illnesses, diabetes, hypertension or obesity, as well as immunocompromised individuals, including cancer patients and transplant recipients, pregnant women due to psychological changes, and children under 5, especially the unvaccinated. Now, during any spike in respiratory infections, individuals in these categories are advised to take precautions, wear masks in public, avoid crowded areas, stay home when possible, and practice regular hand hygiene. We'll slip into a short break, but before that, let's look at the other global stories that we're following for you this morning. US President Donald Trump sends 700 Marines and thousands more National Guard troops into Los Angeles as immigration protests escalate. Trump vows protesters will be hit harder than ever. Donald Trump also says he won't drop friend-turned-foe Elon Musk's Starlink service. Brushes off Musk's drug use reports in White House as speculation. China's trade pain deepens as export growth stalls and deflation surges amid US tariff pressure. Wall Street sees modest gains led by tech stocks. Investors monitor US-China trade talks in London. American entertainment conglomerate Warner Brothers Discovery announces corporate split, separating its studio and streaming arms from cable operations. Canada pledges to hit NATO's 2% defense spending goal 5 years early, response to mounting US pressure. NATO chief Mark Rutte calls for 400% surge in missile defense, urges 5% total security spending target from partner countries. United Kingdom restores winter heating subsidies for pensioners after public outcry forces a major policy U-turn. And American chipmaker Qualcomm to acquire Britain's AlphaWave for $2.4 billion, aims to expand AI capabilities. All these stories on the other side of the break. You're watching Morning Brief at 9.
Every brand tells a story. And they are the storytellers, the Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
Welcome back. You're watching News 9. Let's now bring you all the global stories that we're tracking for you this morning. In what could be the biggest flashpoint yet in the Trump administration's aggressive efforts to deport migrants living in the country illegally, the United States President Donald Trump ordered active duty U.S. Marines and 2,000 more National Guard troops into Los Angeles on Monday, vowing those protesting immigration arrests would be, quote, hit harder than ever.
Quite an insurrection, but it could have led to an insurrection. I mean, that was a lot of harm that was going on last night. I watched it very closely, and it was amazing that the job that the National Guard did. And by the way, the police were working very hard also. But, you know, the police are given instructions to be politically correct. I said, no, you don't have to be politically correct. You have to do the job.
Meanwhile, California's governor is suing U.S. President Donald Trump for sending in the National Guard and impinging upon the sovereignty of the state of California. Let's stay with the U.S. President Donald Trump, and he has clarified that he has no plans to cut ties with Elon Musk's Starlink, calling it a good service. Trump said he wished the SpaceX CEO well and would appreciate a call from his end.
No, I haven't heard that. I mean, I may move the Tesla around a little bit, but I don't think we'll be doing that with Starlink. It's a good service. Look, I wish him well. You understand. We had a good relationship, and I just wish him well. Very well, actually. I would imagine he wants to speak to me. I would think that. If I were him, I'd want to speak to me, and maybe he was already called. You'd have to ask him whether or not he's already called. But I'd have no problem with it.
All right, China's export growth slumped to its lowest level in 3 months in the month of May this year, with US tariffs taking a visible toll on outbound shipments. At the same time, factory gate deflation worsened in China, reaching its steepest level in 2 years, adding pressure on Beijing to stabilize both domestic as well as international demand.
There were more signs Monday that US tariffs are starting to bite in China. New figures showed exports rising just 4.8% on the month in May. That was well down on April and the slowest rate for 3 months. Imports also tumbled far more than expected. Overseas shipments had surged earlier in the year as US firms rushed to stock up on Chinese-made goods before the tariffs kicked in. That meant some slowdown had been expected later in the year, but May's figure was still worse than forecast. One analyst said exports were probably also hit by tough customs inspections, with China looking to enforce its own curbs on shipments to the US. Monday's figures also showed declines in Chinese imports of oil, coal and iron ore, adding to signs of weak demand at home. That also showed up in producer and consumer price data. Both extended declines, with producer prices dropping 3.3% in May, the sharpest contraction in 22 months. In a symbol of the sagging demand, US coffee chain Starbucks said Monday it would lower prices in China for some iced drinks. Now the numbers are likely to increase pressure on policymakers to step in with more stimulus measures. Beijing last month rolled out moves including cuts to benchmark interest rates, with more steps now widely expected over the course of this year.
A life-saving non-profit that's helped feed more than 10 million children worldwide is now on the brink of shutting down. Mana Nutrition, a Georgia-based organization in the US, manufactures peanut paste used to fight malnutrition. The company says it may now be forced to halt operations because of sweeping US cuts to international aid. Watch this report for all the details.
This 80,000 square foot factory in Fitzgerald, Georgia, makes ready-to-use food packets to help fight malnutrition overseas. Mana Nutrition, a nonprofit that says it has fed 10 million children across the globe, churns out peanut butter paste that is packed with milk and multivitamins. But the Trump administration's deep cuts to federal programs targeting international aid have threatened to choke off the financial lifeline that keeps this plant running. Former evangelical missionary Mark Moore is Mana's co-founder.
If this plant goes away, then you're talking about a lot of death, a lot of kids losing their lives.
USAID, which accounted for about 90% of Mana's budget, has been all but decimated by the Department of Government Efficiency, Trump's cost-cutting entity led until recently by billionaire Elon Musk. In letters sent to Mana and reviewed by Reuters, the government offered no specific reasons for terminating its contracts, other than to say the work was not in the national interest.
If we lose USAID as a funder, they're the 800-pound gorilla in the room. Without them, global food aid will grind to a halt.
Moore says he's holding on to hope, faith, and seeking partnerships with other aid groups to keep the mission alive.
If I were a normal person, I would say we're in trouble. We're in trouble already. But we haven't laid anybody off yet. We haven't shut down yet. We're running right now as we stand here. And for that regard, we're good through August with no more orders. At that point, we have to figure out what are we going to do.
Despite having just enough cash to keep the southern Georgia plant running through August, Moore has vowed to keep it running and his 130 workers employed. LaTronda Williams, who has worked at Mana for 8 years, is still optimistic about the future of MANA's life-saving mission.
When you're doing good work, the Lord always makes sure you can continue to do it. So if you're doing his work, and which I believe we are, then he's going to make sure that maybe a little rough spots going on, but I think we're going to be fine.
All right, American entertainment conglomerate Warner Brothers Discovery announced plans to split into two separate companies, dividing its studio and streaming services from its cable television operations. The move is aimed at helping the entertainment giant compete more aggressively in the streaming era. Take a look.
Warner Brothers Discovery said on Monday it would split into two companies. It's to separate its studios and streaming business from its fading cable television networks. The parent of HBO and CNN wants to compete better in the streaming era. The breakup is the latest sign of the great unravelling of decades of media consolidation, which created global conglomerates spanning content creation, distribution, and in some cases telecommunications. The reset would provide Warner Brothers Discovery's streaming unit more room to scale by producing studio content, and without being held down by the declining cable networks business. Its CEO, David Zaslav, will lead the streaming and studios business after the breakup, while CFO Gunnar Weidenfels will head the global networks unit. This separation is expected to be completed by mid-2026. WBD shares were up nearly 6% in pre-market trading.
Moving on now, Canada will reach NATO's 2% military spending target 5 years ahead of schedule. Prime Minister Mark Carney confirmed the defense budget boost on Monday amid sustained pressure from the United States and its allies. Canada currently spends about 1.4% of its GDP on defense. Listen in.
I'm announcing today that Canada will achieve NATO's 2% of GDP target this year, half a decade ahead of schedule. And we will further accelerate our investments in years to come, consistent with meeting these new security imperatives. Threats from a more dangerous and divided world are unraveling the rules-based international order. An order that was fused by the settlements at the end of the Second World War and the end of the Cold War, an order on which Canada has relied for longer than many of our lifetimes. We should no longer send 3/4 of our defense capital spending to America. We will invest in new submarines, aircraft, ships, armed vehicles, and artillery, as well as new radar, drones, and sensors to monitor the seafloor and the Arctic.
All right, staying with NATO and with defense spending, NATO Secretary General Mark Rutte has called for a dramatic 400% increase in missile and air defense ahead of this month's NATO summit in The Hague. He's also pushing for a combined 5% of GDP from members, split between defense and broader security efforts. Listen in.
NATO defense ministers agreed ambitious new targets. The exact details are classified. But we need a 400% increase in air and missile defense. We see in Ukraine how Russia delivers terror from above. So we will strengthen the shield that protects our skies. Our militaries also need thousands more armored vehicles and tanks, millions more artillery shells. And we must double our enabling capabilities, such as logistics, supply, transportation, and medical support.
Well, a major U-turn. Britain will reinstate winter fuel payments for most pensioners after months of political pressure. The £200 to £300 subsidy for heating bills in the colder months will once again reach 9 million people in the United Kingdom, excluding only high-income earners. Take a look.
This winter, 9 million pensioners will now receive winter fuel payments. It will be still means tested, but at a higher level. We've listened to people's concerns around the level of the mean test, and because of changes we've made and the stability we've brought back to the economy, we are able to increase that amount. And we will set out in the normal way in the budget how everything is funded.
And finally, back to US. US chipmaker Qualcomm announced a $2.4 billion acquisition of Alphawave, a UK-based semiconductor firm, in a move to bolster its AI capabilities. The news sent Alphawave stock soaring nearly 25% by the end of trading. Take a look.
US chipmaker Qualcomm agreed to buy semiconductor firm Alphawave for about $2.4 billion on Monday. It's a strategic buy for Qualcomm as it tries to strengthen its AI technology. Alphawave is the latest British firm to be bought up in a market hit by low valuations and stunted growth. The announcement sent Alphawave shares up almost a quarter. Shareholders will receive a near 96% premium to the March 31st closing price immediately before Qualcomm disclosed its interest. Analysts said they don't expect the deal to meet any material regulatory obstacles. Alphawave designs semiconductor tech for data centers, networking and storage.
And that's all we have for you on the show today. But of course, news comes from... So do stay tuned.
Fertility rates in South India have dropped more sharply.
In the future, you can see it going further down.
Population aging is definitely a cause of concern.
This is an alarming situation. Horror of horrors, the Pollachi horror. Anna University case is despicable.
Of course, there is a political angle everywhere involved.
Can they ever erase the trauma of these Tamil women?
They give a lot of psychological counseling and support to the victims.
Can we still make up?
टेरर और टॉक एक साथ नहीं हो सकते। बीते दशक में भारत ने 2 लाख करोड़ डॉलर अपनी इकोनॉमी में जोड़े। 25 करोड़ लोग गरीबी से बाहर निकले हैं।
He plainly tried to internationalize the Kashmir issue.
We know as a matter of fact that it was Pakistan that ran to America.
West seems to disregard anything that doesn't affect it directly.
Donald Trump is trying to tell the world that I am the savior.
He has no business of speaking about Kashmir. There's a Russian reality, there's an American reality, but I suppose there is also an Indian reality.
Pakistan will test you time and again on this particular issue.
We have actually struck harder, wider and deeper.
The escalation happened, so be it.
India must not make the same mistake again.
Light, camera and